What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today I'm going to be talking about the dollar, gold, Bitcoin, Russell, Nasdaq, S&P, and I'm going to give a little bit more detailed description of my thinking behind the tweets I put out over the past week. And last but not least, dare I say I'm going to talk about GME. I know this is a Futures Radio Show, but there's a lesson to be learned from what I saw and what happened with GME this week. Futures Radio Show is sponsored by CME Group. They are the world's most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, you can subscribe to Futures Radio Show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher, or anywhere where you can get podcasts these days. If you're enjoying the show, please leave a review on iTunes. And if you're watching the show on YouTube and you want notifications, click the subscribe button down below. This show is also sponsored by Trading Technologies, TradeStation, and FTSE Russell. The Russell 2000 is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 future symbol RTY and Micro E-Mini Russell 2000 future symbol M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Okay, where do I even begin here with GME? So, as you know, this is Futures Radio Show, and I always stay in my lane. I talk about markets I trade. If I don't trade them, I'm talking about them because I use them as confirmation. GME doesn't fit in any of that. But if you're listening to this on iTunes or anywhere else where you could hear the podcast just in audio, you could go to YouTube because I'm actually going to be showing some charts today. And this is something I'm going to be doing on a regular basis. So if you're listening on any of the audio platforms only, you can go to YouTube to see some of the charts that I'll be pulling up. And you know, GME, let me just pull up the chart of this because, I mean, let's just face it, this is the craziest thing that probably many of us have seen in some time. Not the craziest thing I've ever seen. I mean, I've seen things like this before, but it's one of those things where you're just like, every 5 minutes I was going, wow, this is unbelievable. And like I said, because I'm not trading it, what does it really matter to me? But it's just interesting because it's this company, GameStop, which I know very little about, but let me pull up the screen, and I want to do it to show you the chart because I think that showing the chart is important when you're looking at everything you're seeing with what happened here. And if you look at how much this stock has moved, and everybody is saying to themselves, well, what happened there? And I know you got all these different things going out there, reasons as to why this happened, and I'm not going to get into all of that. I mean, when I look at it, and I say, obviously, you got a lot of people loaded up short that have to get out because remember, a market always moves the fastest and really strong in any direction when people have to do something. I mean, when people don't have to do something, markets continue to grind, but when people have to do something and get out of a position, the markets move fast and they move much further than you anticipated because people have to get out. They don't want to lose any more money. And that is essentially what you're seeing here in GME. And what I want to talk about, what the lesson is, it's know where you're getting out before you're getting in. I mean, moves like this can happen. And obviously, because we're seeing them, they can happen. And we've seen them in many different markets. Look what happened in crude oil last year. I mean, that is definitely the wildest thing I think I've ever seen. But just many different markets have these kind of moves, even the move in Bitcoin, which was pretty incredible. But what's the lesson here that I talked about at the beginning of the show? Know where you're getting out before you get in. How many people go into a trade and only could think about where they're getting out for a profit, and they don't think about where they're wrong? Second trade first. How many times have you guys heard me and Pax and several other people that I've had on this show talk about, specifically me and Pax, because we both had the same mentor, Mickey Hoffman, talk about know where you're getting out before you're getting in. And that is really for where you're wrong. That's not for where I think the trade will go and where I'm going to cover for a winner, because at that point, who cares? Winners take care of themselves, but losers are when things like this happen. I mean, and so many people are talking about all these people that blow up that are professionals, and I think about it and I go, as a professional trader who's blown out accounts, I haven't blown out accounts because of moves like this. I blew out accounts because I stunk for a good period of time, but I never really had really big losers. I just had a lot of them. And it really came down to when I see something like this and I hear these people that are blowing out, how could you be so open-ended positioned and not cover? And well before this gets to be obviously what we're seeing in front of us, which is just crazy. It's at $325 as we sit here right now as I'm recording. But I know the liquidity can be an issue. The thing can get thin. But ultimately, if you're a professional, you need to always know where you're getting out before you're getting in, and never let yourself be vulnerable like this in any position. I mean, this is Futures Radio Show. We're not talking about stocks here. And I know it could be a little bit different, maybe in the way that these hedge funds or whatever these people are doing. But from a day trader's perspective, I just can't absolutely fathom putting myself in a position to where I don't know where I'm getting out and absolutely take the stop. And like I said, this is coming from someone who's blown out a bunch of times before. And I look at this and go, if this was be the reason that I blew out, then just shame on me. I mean, what am I doing? I mean, why would I put all my eggs into one basket like that? And, and just something I would never even think about doing. And it's just the lesson once again, know where you're wrong before you even get in. The price where you are wrong is the most important price. And if this doesn't teach us that lesson, I don't know what does. So that's what I want to talk about there. I'm going to pull up the dollar. I'm pulling up the dollar because to me, the dollar, it's just the most important market to watch right now. I listened to a podcast. I actually put a tweet out about this. I don't know if I think it was 2 weeks ago now. Eric Townsend has been on the show. Luke Groman, who's been on the show. Both guys I'm fans of. They both do great work, and I respect their work. And I thought it was the best. It's probably the best podcast I've heard this year for sure. And Luke does a phenomenal job at explaining his reasoning for the dollar just continuing to go lower. That's not what I do here. But what I do is I look at the dollar and say, is what he's saying confirming what I'm seeing on the technicals? And I have my chart pulled up here on TradeStation. It's a daily chart. And when I look at the dollar here, you could download my indicator for free actually now. And I use TradeStation, and also I use TradeStation on TradingView, and it's available on both. Thank you to everybody. Quick shout out to everybody that DM me on Twitter about getting my indicator out on TradingView. It is now on there, so you can go there and look. It's called Beacon. And you can just search Anthony Crudele. It'll come up. But I'm not here to tell you what to think about the dollar, and I'm not a macro guy like Luke is, and and even Eric and how they talked about it, and which I totally agree with them and their thesis as to what I think the dollar continues to go lower. It could bounce, but it's something that I look at and I say, how has it reacted on my strategy? Because in the end of the day, that's what matters the most to me. And this is just basically, it's just about a year of the dollar. And when I go back and look at it, the pink lines are my resistance lines. And it's just something really to see here. It's, it's pretty impressive that it's been a year since we hit a resistance line of the dollar on my chart. And that was back early, actually not quite a year. So what has it been, 10 or 11 months? It was March, going back to last time the dollar hit resistance on my chart, on my daily chart. Since that high, it's not hit a pink line one time. It could barely get above my orange, which is my neutral. On TradingView, I actually use it as yellow as my neutral. You can color code them whatever you want, but the point of the matter is it can't even get above my neutral area. So what does that tell me? It tells me that this thing fits right in line with their macro view, and if it starts to get above my orange or my neutral, maybe it does hit resistance, and I'll watch how it trades from there, and then I'll look to see how that impacts other markets that I'm trading. At the beginning of the show, I said I only talk about markets that I trade or markets that are correlating or something that I look at it for confirmation in the market that I'm trading. The dollar is the number one chart I look at. I don't look at it intraday. I look at it daily, period. I don't even look at it on any lower time frame. I don't need to. I know the bigger picture levels. If they get there, that's it. I just want to know, is it getting above my neutral? Is it going to potentially test resistance? If it continues to stay below it, everything that goes against the dollar to me is bullish. And that brings me to what I go back to, and something that I am trading lately is Bitcoin. So actually, I'll put up the Bitcoin futures. So here's the Bitcoin futures, 29,700 as we sit right now, which was interesting as I talked about this a little while ago. I said I've talked about this a lot. And my indicator, you can see here, is just the Bollinger Bands. And when they're going up until they start to revert back in, then when they start to revert back in, that's when I think that the market can be faded in this particular instance. So you can see where my arrow is pointing here. 36,372 was where it came in on the futures. Now, I'm not looking to short Bitcoin, but that's where an area came in. My strategy showed me that it's potential that it could stay below it. Daily closes below it. 28,027 is going to be key support. That's what I'm eyeing right now, because I think that with a weak dollar, I will continue to look to buy dips in Bitcoin. So 28,027 is a big area for me. I'll watch to see how it trades when it gets there. I always say support isn't support until I see how it trades. If it gets there and the dollar is still below their neutral, that's interesting to me, because maybe I look at for a buy in Bitcoin. And I'll go down to shorter term charts for this, but I want to keep the daily up because that's my bigger picture area. If Bitcoin gets below 28,027 and maybe the dollar gets above its neutral, or maybe even gets up to a resistance, then I'm going to be less interested in buying Bitcoin. So it's something that I'm watching that I think is very important now, because as the dollar is trying to bounce a little bit and you're starting to see, it's minimal, the dollar bounce, but if it does happen, watch support on the correlating markets. So Bitcoin is something I'm watching. I have no position right now, but it's something I'm watching. Now let's go into another market that I trade a lot, and that's the Nasdaq. And with the Nasdaq, as you can see, it trades every resistance level that I have. It's impressive that the Nasdaq can hit every resistance level that I have. And what's interesting to me about the Nasdaq right now is you're getting above, you could see here, if you're listening just on audio, well, they're getting above my top resistance, and that Bollinger Band is starting to come back in. But right now, volatility, it's pretty tight. It might get a minimal pullback here. But once again, if the dollar starts to accelerate, and I look at my levels in Nasdaq, which I don't actually have any on the daily right now because it's above everything, and I'm waiting to see if the Bollinger Bands come back in. That's why I haven't really been active much in it lately. This has been a little over a week now. The Nasdaq has been outside of what I would consider a tradable market for me, because it's not within my daily levels. That's something to watch, because I keep going back to what's my theme here. What's the dollar doing? What am I going to be doing with the markets that I trade against the dollar? If the dollar bounces and all these markets start to pull back, like Bitcoin already has, obviously, but if it pulls back further and the Nasdaq starts to pull back and it gets to support and it can't hold and the dollar's going up, it's something that I'm thinking about. I don't want to touch it. Another market I want to pull up real quick is gold, because I actually said this on my podcast with Tracy, Shy Girl, not too long ago, and that was, I want to buy gold with every bone in my body. And like I said, I don't know. I don't know if it's because I listen to Peter Schiff's podcast, which is pretty good, by the way. It's one of the podcasts I listen to. And, I got to tell you, and that's just a joke, obviously. I'm not buying it because of whatever he says. But my point is that I want to buy it because I think that there's just a lot of macro reasons. I've talked with Ira about this, and all the macro people that I really trust and like. They feel that gold is a market that you want to be long. Even you go back to, I had a podcast with Kushal. He said gold and soybeans are two markets that he really likes to be long. He's a macro guy. And I just look at it and go, how's it been trading on the chart? Well, what I have up here is the 200-day moving average on the futures. I just have the gold continuation daily here, 1870. My support right now comes in at 1838. This is an area back in here I've been continuing to look for longs in there, but I couldn't get above my neutral. It's a position that I keep getting in and out of. I keep trying to get long it. It's working a little bit, and then it's just getting me out. It's a position I can't hold currently. As you know, I trade futures, so it's a little bit different than just owning gold. I don't just own it, I trade it. And when I look at gold right now, the 200-day moving average at 1870 to me is, I got to see what happens with the dollar. If it starts to push above 1870, I'll go to my shorter term charts. It would then held my support at 1838. Another market that's tough for me to trade right here. If it starts pushing above there, I just got to start getting back to look, to get long gold and maybe, just maybe try to hold on to something. Something I actually been thinking about too. I saw Bitcoin pull back. I thought maybe that would give a boost to gold. It's done nothing for it. I mean, it did a little bit bounce, but I was thinking that because I'm thinking maybe the money they made in Bitcoin, they start to buy gold. It's not working. So gold right now is something that I'm keeping an eye on. And once again, going back to what I'm seeing in the dollar, not just because of that, more to it, but that's what I'm seeing. I want to go back to the S&P because we looked at the Nasdaq. What I'm seeing here on my indicators is really just a market that volatility is getting pretty tight. We know that. Maybe we could see the VIX start to spike up here with a lot of things that are going on. It would be great to see because on my strategies, all these markets are sit back and wait. We might be starting to set up for a little bit more of a pullback here that I'd be looking to buy once again. I think a lot of it's going to come down to what I see happening in the dollar and how I see these markets react at support when they start to come down. But for me, primarily, I'm not looking to be short. I'm looking for an opportunity to be long Nasdaq, S&P, and Russell. Like I said, intraday, S&P and Russell have actually become more swing markets for me because the Nasdaq has really become my day trading market at this moment. But the S&P and Russell on pullbacks, I'd be looking for swing positions. And I just think, once again, watch how we trade around support. No levels right now. And I talk about that because everybody tries to tell you where they think the market's going to go or what it's going to do. At this point, I just have nothing. I'm just watching it kind of grind sideways to up and volatility shrinking. My Bollinger Bands aren't giving me anything to look at with my indicator. It's just tough right now. And next thing I'm going to go to is the Russell. And the Russell to me is very interesting for any significant pullback because that's a market I do want to buy. I've talked about this a lot over the past year. Russell's a market that I've been trading a lot more on the swing positions. And, I'd like to see a decent pullback there that goes and tests support, holds support, and I'd start to look for a swing position in it again. I've continued to look for longs in Russell. I think it's one of those markets right now to where I look at it and I'm just... I see the way that it's trading. Actually, funny story I'll share with you. I was actually on a call with a trader the other day, and we talked about, why am I trading the Russell more than ever? Well, there's a couple reasons. I think that Russell's more sector-based. When you look at what's happening with a lot of these other markets, a lot of them are individual stock names, FANG, what have you. I like the Russell and what I saw, with healthcare, biotech was a big mover when they had that November to remember. It was a big move up in Russell. There was a lot of support internally on the markets, on the sectors that support it. And even going beyond that, I felt that the Russell was going to play catch up at some point. I've talked about this in the podcast with a lot of people. Actually, people spreading the Russell versus the S&P. I didn't have that spread on, but ultimately, what's interesting about the Russell is I went back, I don't know, maybe 6-8 months ago, maybe a little longer than that. Time flies so much now, it's incredible. But I went back and looked at how the S&P traded when it was around these prices. It was interesting. And I'm not comparing the Russell to the S&P at all. What I'm comparing is how did the S&P trade when it was at these prices, 1,500, 1,600, 1,700? And I said, what could be really interesting is that maybe the Russell looks very similar to that when it starts to break out. If you go back and remember the S&P had that 1550-ish high, and it made a low, and then it came back up. And when it finally started to get through it, and we started, next thing you know, we had just had that March higher. Very similar to what we're seeing in the Russell. And it was one of those things. I mean, price action repeats on different charts, and especially when you have something like the indices that I think was somewhat similar between... not that the Russell and the S&P are products that are alike, but more about how they traded when they went through these prices because they're all new prices for the Russell. So I actually went back and did that, and I said, if I could go back, I would be long the S&P that entire time, and that's kind of the way I feel about the Russell right now. Who knows how long it lasts? Anything can change, but that's just something I'm thinking about. So that's what I know. It's just kind of a strange thing, but that's something that I was looking at and why I was trading the Russell. All right, we're going to pause here for 30 seconds. And when I come back, I'm going to go over the tweets that I put out this week and give you a little bit more of a detailed explanation on those tweets. Hang tight, I'll be right back.
Get S&P 500 and Nasdaq 100 by the slice. Just 1/10 of the pie. Trade the tastiest index futures, micro E-Mini options with TradeStation. Get a piece of the pie now.
Trade the global markets with Trading Technologies. TT is the world's fastest commercially available futures trading platform, now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. Welcome back, traders. I'm going to talk about some tweets that I put out over the past week. And, I want to do this because I think especially even for a lot of the people that I follow on Twitter, I love their tweets. Some of them I can't retweet enough or like enough. And I wonder what the thinking is a little bit beyond it, because you only get so many characters on Twitter. And I think that it's just important to hear sometimes. There's many people I follow on Twitter. I'll send them a private message and say, I love that tweet, talk to me a little bit more about it. And so I think that something that I'm going to start doing a little bit more is explaining the thinking behind the tweets that I put out over the past week on the show. And the latest one that I put out just yesterday, today's the 27th as I'm recording here, is you only figure out what type of trader you are, your style, can you get what you want out of the markets. And the reason I put that out is I was looking at everybody trying to, everybody is so focused on things that they can't control. As a trader, it's one of those things where it just drives me nuts because I only focus on things that I can control in my world. People feeling like they missed out on GME, that's just crazy to think about anyway, but all these other moves, Bitcoin, and instead of chasing those types of moves, there's probably only one trader that I truly know that actually searches out these volatile moves to take advantage of, and that's John Carter. He talked about that in the podcast. He's got a great, process for doing that. But if that's your process, that's fine. But I think that most people are trading just a handful of markets, especially futures traders. Stock traders, it's different. They trade as many markets as they want. They have certain criteria that they go through. But once again, go through that criteria. What type of trader are you? What style? And one of the comments that somebody put out, let me go back and read it. So LUMILOZ put out, meaning after finding product, time frame. And I said, yeah, product, time frame, technique, edge, strategy, building confidence in something, even if it's not working out right away. If you believe in it, then you'll get better at executing it. How many years have I been saying this on the show? You are better off believing in something that has a lower statistical probabilities than something that has high statistical probabilities that you have no idea what's behind it. I always talk about teaching traders how to think, not telling them what to think. I think a mistake that so many traders make out there right now is what to think. They want to know what to think. What should I buy? What should I sell? Don't think that way. If you want to learn from somebody, and there's a lot of people I've learned from on this show and beyond this show, and what I've learned from them is how they think, and that's how it's helped me as a trader, not by them telling me what to think. It just doesn't work that way. Know what type of trader you are first, then you could start taking advantage of situations. And I want to talk about Morgan Housel's tweet, this GameStop thing, as a reminder that investing is not the study of finance, it's the study of how people behave with money, and sometimes those behaviors are incredible. And I know I'm back to talking about GME, GameStop, whatever, but I retweeted that tweet. And I don't retweet a ton of tweets, but that one I thought it's exactly right. That's perfect. And going back to, I look at it as, can I take a lesson from that? And the lesson is, as I talked about earlier, know where you're getting out before you're getting in. Hearing funds blowing up and these types of things happening, that's their business. That's what they do. But as a day trader, most of us, we're not trading other people's money. We're out there. We have to know where we're getting out before we're getting in. You should never be in a position to where you allow something like that to blow you out. And like I said, this is coming from someone who's blown out accounts. And it's not because I lost too much on one trade. It was because I had too many losers. And I can deal with that. But you've got to protect yourself, period. I mean, everybody talks about managing your risk. If you're blowing out for stuff like that, like I said, I'm not a stock guy. I don't know how they were positioned. I don't want to even, it's not what I want to talk about. The lesson for me is, once again, anything can happen. Protect yourself. That's all I can say. Another tweet, one of the most important things experience teaches you as a trader is that if you have time, you have time. Your self-awareness speeds up while time slows down in moments. To me, that's just so important. Your self-awareness speeds up as a trader with experience. What's happening right now? I know I have time. I don't have to make a decision right now. You don't need to be the first one in every single time. You don't need perfect entries. Everybody searches for perfect entries. I just want to know where I'm wrong. Let me figure out where I'll get in. If I think the trade has legs, I'll get in. You have time. It's just so important. And this awareness, this self-awareness, you only get from experience, period. Allow yourself time as a trader to gain this experience. That's what I put in the tweet. And it just is, it's just so important. I mean, everybody's in such a rush right now. The world is, I need this, I want this. It's like, well, it takes time. Don't rush it. You can't rush it. How about that? And the other tweet I put out is, I used to be the trader that would look at markets making highs or lows and try to find reasons to fade them. That ended up being the hardest time of my career. When I finally let go of that type of thinking and started to go with what was happening, my numbers dramatically improved. That's pretty much self-explanatory. I watch these moves in Bitcoin. I don't get shorted. I use the futures sometimes. If the stop is really tight, then I'll go to the futures. Otherwise, I like to use, just the spot. And I just look at it and say, why do I want to get in front of something like this? I mean, why, even the S&P, I'm not getting shorted. I haven't been short the Russell in months. I can't remember the last time I was shorted. That doesn't mean I won't get short, but I'm not short because it just keeps sitting on resistance and going above it. It's like me trying to be long the dollar right now. I'm not trading the dollar, but would I be looking at any longs after what I showed you earlier? The answer is no. Why? To get a bounce? To get one bounce? Okay, great. You catch one bounce. Is it going to make up for the 500 other intraday losers I probably would have had? So I look at it and say, when things are going, this is, I go back to, I talk about this with my indicator. My indicator was built on the things that I did wrong. That's what it comes down to. That's what you build when you're building strategies. Find out things that you don't do well and put blocks in there. This week on Develop Your Edge, you'll hear me talk with Anthony Drager about qualifying your trades. I thought that was brilliant. You hear me talk to quants about quantifying your trades. I mean, for me, and then going back to just this tweet about trying to fade things, why do I want to fade things that are working really well for the ones who have accumulated all this money? Remember something. If something's working really good for a trader, just think about this. They're building up wealth. I know that when I have a good trade on and it's working for me, a lot of times, especially back in the day when I would trade a lot bigger in the S&P, I just keep pressing. I'd see, if I was short or long, they'd pop or break a little bit my way, boom, I'd grab a bunch more. And I'd take that trade as far as I could take it because that's what I did. And that's what these moves are doing now. They're doing it in a way where there's so much coming behind it. And the people that are making money are buying more or selling more, mostly buying on everything. And new people are coming in and they're just jumping on it. Why do I want to fade moves like that? It's a type of thinking where you're looking for that one pullback. Great. I mean, it's, the hardest thing to do when you're trying to get in those trades is wait for the opportunity to get in. I've been waiting for a Russell opportunity for a while to buy. Maybe I won't want it when I get it. I'm sure I'll feel hesitant about it, but if it fits my criteria, I'm going to do it. I mean, that's just what it is. I mean, qualify, quantify. I think that's just so important. And I think that, I don't look for the quick buck against a move anymore. And if I'm scalping in a market, I scalp with the trend. I don't scalp against it. I just think that that's, it's a losing proposition. At least for me, it was. And in these markets especially, we are different. We were in mean reversion type markets when I was younger and as a trader. Now everything is momentum. Momentum is everything. So that does it for me today. Look for me to be doing a lot more of these individual ones just like this, where I go over some charts. So if you're listening on iTunes or Spotify or Stitcher or Google Podcasts, or once again, anywhere where the podcasts are available these days, there's a lot of places. I don't even know all of them. Go to YouTube and you'll see what I'm talking about with some of the charts that I post Remember, you could also follow me always on Twitter. And what I did recently was I opened up my DMs. And I got to tell you, it was one of the best things I ever did. I opened it up and, you get some spammy ones. It is what it is. It is, it doesn't bother me. But I think that opening it up and the people that have reached out to me and talked to me about either tweets or anything about, our industry is really been great. And I plan on keeping them open. I know, like I said, there's been some spammy stuff, but like I said, it doesn't really bother me. And I look forward to hearing from all of you. So my DMs are open on Twitter. So I'd love for you to reach out to me there. That's it for today. Have a good week, everybody. See ya. Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.